I wanted to really focus on you all and all the startups and answering questions. And am I too early? I'm starting too early. Oh, we're super early. So I'll just give you a little bit of background on me and what I do. So I do host the show, the Next Round Ready podcast, and I've been podcasting over a decade, and it's been the most life changing thing for me ever because I get to connect with so many people that are richer and smarter than me. Like that's like literally what I do every day, and it's just the most amazing thing. And with this show, what I love is connecting with investors. Oh my goodness, I get to talk to so many investors like nonstop. And I knew I struck gold when they started reaching out to me on LinkedIn. That's when I knew I had something. So a cheat code is to start a show. I know you probably hear that all the time, but I'm so serious. Starting the podcast has helped me get into so many rooms I didn't even know existed that I wouldn't even be a part of, honestly. Um, and this year, in the past 3 months, we had season 3 of the show. We reached maybe 70,000 downloads. I was doing 5 episodes a week throughout January and February. March was just insane. I've been at events all month, so we had to switch it up a little bit. But now we have even more investors. I get to work with universities like the University of Oregon, Portland State, a bunch of accelerators. I'll be judging the University of Washington, their startup competition event next month. So nothing but startups and investors like all the time. So again, I definitely appreciate it. And it's given me a different perspective, which is where this comes from, of what investors actually want. Because my strategy when I do the show is I always schedule for an hour, but I do the first 30 minutes is the actual podcast. The second 30 minutes is what I call the green room. That's when I just get to talk business with investors. I get to learn things that it's literally priceless, honestly. You couldn't pay for it because they just talk business. I had Itamar Novick from Recursive Ventures, and I was talking about one of my business ideas. He just told me straight up, that's terrible. I would never invest in that. Which it sounds bad, but honestly, I kind of like it because I prefer for you to tell me it's terrible now, and I actually made it better. And I went and built the product, vibe coded some stuff, and I had my first customer within 48 hours. So like that harsh feedback investors give you is so important because they know what they're doing. That's why they are the investor. Not all of them, not all of them, but most of the time. So today I want to get into, how you can actually raise capital and what these investors really want. Like I said, I don't have a ton of slides because I want to talk to you as people. Like I don't want you just reading the screen the whole time. But I ask a lot of investors the same questions when I have them on the show. Like, what do you invest in? What makes you want to invest in a founder? What are red flags, green flags? And that's where all of this comes from. And by the way, there are some that I talk to that can't be on the show for some legal reason I don't know. So we'll talk for like an hour, sometimes 2 hours, and I can't even record it and put it out. It's just something I keep in my own archive. It's just have an archive of conversations with like billionaires. I might put that out later in life. That'd be good. So most founders learn from fundraising from just reading blogs and probably talking to random people. You really don't know because it's such a challenging thing. Everybody's trying to figure out a fundraise, right? For me, what I did is literally talk to over 100 investors in the past like 6 months. It's what I do full time. And for the last 2 years, really, I've talked to founders and investors just to continue to gather information. And I built a network of, it says 600, it's probably more. But some I have really, really good relationships with, so I get to get really good insight. So this is for the founders who are trying to raise capital within the next 3 to 6, maybe 9 months. So here, just a 3 pattern kind of roadmap, right? These are not opinions, not random stuff. Again, this is from investors. So number 1 is timing. Number 2 is warm intros. That is your lifeline, warm introductions. Investors will tell you that you can message them on LinkedIn, and it is not the truth. They will not answer you, honestly. And then momentum, that is huge. So the relationships, you have to build those before you need them. I think a lot of founders mess up because they think, well, I want to raise capital and I need money today, So I'm going to reach out to investors today, and they can smell the desperation. They just can. And if you're desperate, it's going to be very, very hard for you to actually raise capital. So the investors want to meet with you before you raise, and always think of it like this: with your runway, you want to be at least a month and a half out. That 6-week gap gives you time. Because if you meet the investor on the first of the month, they're not writing you a check on the 5th. That's just not going to happen. They need time to do due diligence and learn about your team and all of those different things. Give yourself that 3 to 6 month window. And that 6 weeks, what I'm talking about is if you're talking to maybe smaller angels, if you're raising like 100K or something, then you can go short. But if you're raising like 2 million, 5 million, come on, that's not happening overnight, right? And so the relationships are probably the most valuable thing. And when I say relationships, I want to make a distinct difference here. Connecting on LinkedIn is a connection. Connecting at this event is a connection, right? If you come up to me and you shake my hand, we connected. A relationship is us continuing to talk and get to know each other. Building a relationship. There's a difference. Connecting is the initial, I got your name, your email, but the real relationship is from you actually talking with this person over and over again. Kind of my strategy I like to do when I meet investors at events, I literally take my phone out and I take a picture with them. So when we connect on LinkedIn, I send them that picture. That's number one. Number two, I will literally make my lock screen my LinkedIn code, right? Like the codes we all get, and you can just walk up to me and scan it 5 seconds and we connected. But again, that's still phase one of the connection. The relationship is actually talking, all of that stuff. Don't ask for money on the first conversation, please. Don't do that. That's like the worst thing. I kid you not, I've asked every investor about that, and it's probably the biggest pet peeve. I can't believe founders do that. Would you walk up to a random person on the street and ask them for $1 million? Like, of course not, right? So don't do it to investors. They're people too. And so when you get the timing right, you get to accelerate your due diligence, which is, she did speak about it early if you weren't here, is just the process that investors do to make sure your financials are in line and all your legal stuff is right. And it's a lot of stuff you as a founder probably don't even think about. These companies, they have to do that stuff. It is a very big deal. Now, warm intros, I wanted to get to this part fast because I think this is the make or break for a raise. The warm introduction. This is literally where I make my bread and butter right here. So the cold outreach strategy does not work. Just spamming on LinkedIn or Twitter, X, or even at events, that it just doesn't work the way you think it does. You may be able to, again, make the connection, but you don't build the relationship. When you have a warm intro, you get 40 to 60, like response rate is way higher. One of the billionaires I had on the show, well, I was going to have on the show, but I can't make this live yet. He literally told me that he has so much inflow from warm intros, he can never even get to the cold ones. So like on LinkedIn, if you get, imagine 50 messages a day, and you may think these investors are not telling the truth, but I've seen their dashboards, it's the truth. So just don't try that strategy. It's a big waste of time. So really, this is the best process, and this is what I did with my show. This is very tactical. This is how I was able to get, I don't know, man, maybe 50 investors on the phone with me in a month. All I did was list out 10 that I wanted to connect with, and then you know how on LinkedIn you can literally go through. It sounds like a LinkedIn ad, but it's home base for me because it works. You can go through and see who you're already connected with, right? And I would go to my connections who are connected to the investor that I know and say, hey, I want to talk to so-and-so on the podcast. And I really like to do this after I've already given them something or done something for them, like had them on my show, or I even do a little gift card strategy where I send people like $10. Like you literally are paying to make the connections, but you're not giving them just straight cash. So it's a way to build that relationship to get your foot in the door, where now when you go to that same list on LinkedIn and you see who you're connected with, and it's like first, second, and third, now if I go to an investor, I have like 50 connections with them. So it just gets easier when you do it. The start is like the hardest part, but this is the way to get those warm introductions. I'm telling you, map the network. Start off with 10 and keep it simple, and you'll be able to just add on to that over time. And this is like an intro email that I use with some of my founders. I'm sorry you can't see the rest of it, but message me on LinkedIn and I'll send you the whole thing. This is an intro email that works all the time. And when I introduce founders to investors, I use this same process. Because what I do now is I meet founders at events or I have them on my show and I introduce them to investors all the time. And I use this basic email framework. And then if an investor wants more information, then we start the conversation and all of that stuff. But this is very simple. And when you go past the 5-line mark, it's too much. They just don't even read it. Like when you send that wall of text, it doesn't work. It's not going to be useful. They just can't consume all that information. They literally don't have the time. So the warm intro is good because you allow somebody else to talk about how great you are. Like I look at it like this. When you're doing cold outreach as a founder, it's like giving yourself a nickname. Like that's like the corniest thing you can do, right? But when somebody else gives you a nickname, it sticks. It's probably good. That's why the warm intros work. You get instant credibility. So if you have somebody that is another investor, an angel investor, or a founder with multiple exits, and they're like, hey, you should talk to this founder. That sounds really good for you as a founder. That's a really good look. And then you're going to get really good feedback because there's that warmer relationship. It's not as cold. Instead of them giving you the cold shoulder, like, well, we'll reach out in a couple weeks, which means they probably aren't interested. They'll tell you the actual truth. You might get ripped to shreds, but honestly, that's what you want, right? And then your network is going to massively expand. Now, momentum is huge. This is big, and it does matter, depending on if you want to work with higher level VCs or angels. But these metrics will still help you with raising capital. So momentum is week over week signals, right? It's that progress of showing the numbers. This is why I think I got eviscerated on TikTok for this video, but I don't care. I was right. You should vibe code if you don't have the product yet. Just vibe code something really quick to get paying customers because the growth you have week over week will still look better than just an idea. Simple. I know because I have done this myself. Do not try to wait until you get a bunch of money to then go and build this thing for 50 grand. Build a basic one with Lovable, Replit, 44 base, whatever it is. Build something quick and start getting here because then you can build a story around it, right? What you're doing. I had this idea on Monday and by Friday I had a working product. By the next Monday, we already had paying customers. That's going to get you in a room with a VC because you're growing. You're actually making progress. You're making connections. And that shows you probably have some kind of pipeline distribution, which is what actually matters now. Like that's the stuff that matters. Everything can be built super fast now. The real separator is can you get to customers? Can you stand out? Do that as fast as possible. Investors are paying attention. See, and this is what you can show investors, even if you're pre-revenue, even if you're not making a ton of progress, or you don't have a big thing built just yet, even if you need to wait for certain legal things and all of that, you could pick one metric, right? Just one, a wait list, paying users, pilots, all of that stuff tells an investor that people are paying attention to this and they are putting money into it. Let's say you have a wait list of 100 people and then within a week you add another 100 people. That's good growth. That's still a metric. Even if they haven't gave you $1, it'd be good if they have given you $1. But if they haven't given you $1, that's still something else you can harp on. Momentum, right? Conversations, letters of intent, partnerships. This is where I think pipelines are huge here. Something that I did for one of my own products I built is I now connect with colleges and universities to help those founders connect with investors. Every college and university I add is more founders I get to work with to connect with more investors. So I'm creating pipelines with every accelerator and university that I build a partnership with. Once I have 50 of those, just imagine 20 founders from each university paying $100 a month. Pretty solid product there. Maybe not scalable at the VC level, but take care of me pretty good, right? Then the narrative, you got to have a really simple sentence so you can tell your story. Really simple. This is just, again, pre-revenue. This is a basic process to start with that can get you into conversations with investors and they'll want to actually talk to you. So when you have momentum, you can really, really take off. One of them is FOMO. When you have some higher level investors, higher level VCs or angels that are popular in a certain area, once they say yes to you, all the other investors follow suit. It's like a herd. They all just follow you, right? Your valuation goes up. That's more leverage for you. Now you can ask for more. The deals are a little different. And then the right investors will start popping up at your doorstep. I mean, reaching out to you, spamming you on LinkedIn. That must feel good to have investors reach out. Like, oh man. Again, I'll send you guys all the time. I don't know why I can't scroll. Let me try that. Can I? Nope. Okay, it won't let me scroll, but yeah. This is why I hate slides. See, this is why you can't rely on slides. So then this is kind of like my pitch. What I do with my software Compass is I literally have taken all my investor conversations. I put it into this software so I can help founders connect with investors. On the platform, you get to find investors that are active, that are deploying capital, and you can, it's a CRM in there as well, so you can kind of like manage the meetings and stuff like that. Click one button and you can get a warm introduction to the investors through me. Very simple. So I want to use the last, 15, 20 minutes to like do Q&A, right? I sped through that a little bit so I can really focus on you guys and what you want in terms of connecting with investors, the questions you have, and things that you might even want to prep.
It's Chris, right?
Yeah.
Hey, Chris, Yogi. So like you, I have a podcast called The Spirit of Gratitude.
Okay.
And what is the ROI if it's not financial or monetary that I could reach out to social impact investors?
If it's not monetary, I think the relationship part, because when I went to investors, I didn't have anything to offer them in the beginning. I didn't have anything, like nothing. It was just, hey, I talk to a lot of founders. I work with university, so I could possibly help you with your pipeline. But the truth is the investors I talk to, they have a massive pipeline. They don't really need that. What they want from you with the podcast is the spotlight. They want to get on your show and get in front of your audience.
Right.
They want relationships. So if you can connect them to somebody else they couldn't get in contact with before, that gives you more leverage. And I think even part of what you do after the interview is huge, right? So when I have investors on the show, when their episode goes live, I send in a bunch of content, video clips, segments, graphics, all of that stuff. I go and post it everywhere. That helps you expand the reach and really show the investor that you have a connection in that specific space. And I think with your platform overall, because I don't look at my podcast as just a show, I look at it as like a platform. So
Right.
Anybody that's coming on, you have a chance to be on my platform, not just a regular show. So you get to be in front of all of these different people. And a lot of conversations come from it, right? Like me even being here at this event and having my name up here and all the little stuff, it goes a long way. So I think you have to kind of stand on it like this is a platform, this is my thing. And when you come on here, I can connect you with so-and-so. And sometimes just ask. That green room time is what I have. So we can just, how can I help you? How can you help me? And we work together. Like it just works like that. Literally
Right.
just asking and they'll probably tell you.
Yeah. Thank you.
I appreciate you guys for helping me with this. This is good.
I have a similar question. I also have a podcast. It's called Hot Girls Build Cults, and I interview founders, creators, and community builders on the art and strategy of building community. And so it's a great networking tool, but I'm curious, like, have you monetized your podcast at all? Like either by looking for sponsors or, making some of it like gated content, like on like a Substack strategy?
Well, I've monetized. Oh man. I'll go back a little bit. So I started podcasting in 2015. I had a sports show. I was interviewing like NBA players and stuff like that. This is back when nobody knew what a podcast was. So I was like in the closet with my microphone. I sounded crazy. So now it's mainstream. But I have worked with bigger brands, SeatGeek, Nike, all of that stuff. Now I monetize my show through my platform, Compass. That's number one, where I literally set up ads for myself. That's been the most profitable because I have founders on. They want to connect with investors. I can easily send them right over to that tool, right there, monetization. But I'm also working on partnerships. I'm being more selective now because in a startup world, there's just so many different legal parts that you got to be careful of, right? But the sponsors, huge. Even like certain banks, law firms I've talked to, And even sometimes some investors, some founders, they want to sponsor an episode where we put money into like the YouTube video for their episode or something like that. And then they get way more views, more attention, and more connections. So it's a lot of ways to monetize that I have. But with this show specifically, I'm being very, very selective just because I have a bigger long-term vision for what I want this specific platform to be.
Yeah. Do you have any recommendations on how to get a sponsor if your audience isn't huge yet, but you're super niche?
Well, okay, I'll give you my strategy, exact one I used. I got my first sponsor was SeatGeek. They sponsored me, oh my God, what was this, in 2016 or something like that? Long time ago now. And they paid me like $15 an episode to start, but after like the first month, we like tripled it. And we were doing 3 episodes a week, and it was for a 3-month-long partnership. So that $15 added up. Don't laugh at that. It's a good start. Don't use social. Go on LinkedIn, find the companies you want to work with, get a list of 50 specific brands, find somebody in marketing, branding, partnerships, talk to them. Though the conversation shouldn't immediately be about, can you sponsor me? It's more of, hey, I have this audience, I have this brand, we're growing at this rate. Build the relationship, right? Then it's, hey, do you want to get on the call and let's discuss more? What'll really help too, kind of a cheat code, is find 20 other shows in your market that are already doing what you do that already have sponsors. Now you go to those same brands and say, you sponsor that show in this same space. I'm over here doing the same thing. This is my audience size. And now, you know that brand already works with influencers, podcasters. You don't have to convince them. Then you just say, hey, look, I would love to start off with a trial run of a partnership for a month or 3 months, and stay away from affiliate stuff. And if they're not going to pay you, make sure they pay you up front, because down the line, your show blows up. People go back and listen to that content. If they're sponsoring it, they can still make money from that. So they have to pay for it. So don't do anything where it's for free, but go and connect with the people in the marketing department and just have a conversation with them. Build the relationship, because over time, they'll want to work with you at some level.
Hi, I'm with The Building Train. Really appreciate the great content here and the energy. I especially like the idea that the VCs are not going to take these cold emails, even though I had one yesterday morning say, yeah, that's fine. I'm like, that's not my experience, and I appreciate hearing it. Can you talk more about that? You did a good amount, but I just double tap on that. How to use and find those warm leads, and how to help them. Like what are some ways you can help them first and build some value for those warm leads, and then also like the relationship with investors. So you connect, and then what are some strategies of turning that into a relationship? Is it asking for mentorship? Is it asking for feedback? Like what are the things there? Thank you.
Very good question. Okay, so I'll give you another strategy that I use. So with this 10, something else you can do is, this could be 10 firms. Instead of 10 like GPs, you can go 10 firms, right? And then connect with the analysts, the associates, the people at the bottom rung. See, those people are often ignored because founders are like, they can't write a check. But they're the ones who talk to the people that write the damn checks. So go and talk to them, and they're going to connect you with a principal or something like that. And then they connect to the GPs. Sometimes it's best to start at the bottom and then work your way up, right? And then you do that with 10 firms. And a big thing, I didn't mention this, is to make sure their thesis is aligned with who you are as a company. If they invest in health and local stuff and energy and all of that, you can't be the B2B SaaS and think if it's not perfectly aligned, it's not going to work. So you have to do that kind of research as well. And you said building relationships too. This is a tactic I use, and again, y'all might laugh, but this works. I will ask people about their children, their favorite sports team, and their favorite food. Those 3 things. Everybody has a favorite, at least one of those 3, right? And in my notes on my phone, when I save people or on LinkedIn, I will literally save those kind of details about them individually so I can always bring it up. Or if we're in town together, suggest a restaurant or ask them about it, because that takes the conversation away from business where it's more personal. Now you feel more connected to me because you referred me to this restaurant. And if I go, I take a picture, send it to them. and like, oh man, this place was great. Thank you for the recommendation. Now we talk again for the third or fourth time. We feel like friends. You know me since college. We boys. That's what you want. I think when we focus on business and the outcomes we want too much, it takes us away from the relationship part. Where focus on them and small details about their life that some of their family probably haven't asked them that kind of stuff, right? But if you ask them about those things, oh, how's your little son doing? Oh man, I'm sorry the Bears lost, whatever it is. Like, I'm a big Laker fan, so I'm always trying to find, okay, who are you a fan of? Who do you like? If you're a Boston, like that kind of stuff builds the connection and really just personality, man. Don't take it as serious. That's just what works for me. Like, I don't take it all as serious. I don't take myself as serious. You just have more fun that way, honestly.
Thank you.
Yeah, one way in the back.
For all the valuable content. My name is Paul with Love IT Services. For a few of my favorite customers, a lot of my favorite customers actually are newer and smaller businesses and founders. And it's not for me, it's mainly for them because I've been asked this a few times. They're looking into investing or investments and everything. But best case scenario, will go a different direction when they find an investor actually. How do they, if they're pre-revenue or low revenue, what's your advice on how they should approach valuating their business as far as like how much equity to give or what kind of they can get from an investor when they're in that kind of scenario?
That's tough because it's such a leveraged conversation. And that often changes. Like, I don't think many investors now don't care about like what college you went to, but they do care about your team and stuff like that and the opportunity of the problem. Like, it's so many layers that goes into that. I don't think you should be too much of a stickler on that as a founder, especially if you don't have a lot of leverage behind you personally or your team. Like, if you had an exit or something, you've already closed 50 million, whatever it is, you can obviously say and do a lot more. So I try not to be super specific on that, but whatever you want your valuation to be, I think you need to be able to back that up when you talk to investors because they're going to want to know why. You can't just go in saying a number and they're just, okay, like why though? Like how the market size is not enough. That's just not a good enough answer. Like, well, we can reach 1 billion people. Like, everybody says that. To be honest, everybody says they can reach 1 billion people. Everybody says their product is revolutionary and a disruptor. If you have specific reasons as to why, that's why I think the traction matters of some kind of numbers, because if you can show we have X amount of users or early stage clients, or we have people that, have signed up to our wait list, that's going to make the conversation evaluation even easier too, because you can show some kind of proof. The proof, just having that makes every conversation with an investor much easier. I heard it in one of the earlier talks. The gentleman in the back was on a panel. I heard it in their talk. And what she said was when you talk to a VC, you want everything to be flat and all you need is money to like raise it up, right? That's the goal, right? So you got to be able to step to an investor and be confident in what you're saying of, we've gotten these results. This is what it looks like. This is the progress we made. That just is all, it comes off way better. And you'll be more confident too as a founder, right? Like, wouldn't you be more confident even telling your parents about your company? If it was just a lemonade stand, I sold 50 glasses of lemonade. Give me some more money to buy more lemonade. They'll be more likely to give you that money. But if you come in like, I only sold 5, I kind of want more money. They won't give you more money and you can't be mad at them. So you got to have something to show to investors to be able to back up the valuation that you have.
Awesome. Thank you so much. Black Mamba forever, by the way.
There we go. There we go.
I'm going to break this thing. Two things. One, if the investment has gone through a safe or convertible note, then you punt on the discussion of evaluation. So you're able to raise funds showing momentum and based on projections versus like a straight evaluation at that particular time. So that's one thing. But my question is, there's no speaker, so I'm not going to hear it. Got it. Have you found amongst angel investors, is there a community of angel investors that put maybe a 10x return just under social impact? Or are they all focused only on that 10x return and not really concerned or interested in companies that are focused more on helping people and making money versus just making money?
You know, this is something I just talked with a angel investor about like maybe 2 weeks ago. There are some that care more about the money than the impact. Honestly, there are some out there. They don't just come out right and say it, but it's the truth, you know? And I think with them, they kind of operate a little differently where they do focus on traction more. They talk more about the team and less about, you know, how are you going to help people be employed and how is it going to help the environment? Like, I think there are some now angel investors where they're focused on that outcome. They want that big exit. I think part of it too is an ego thing, honestly, where they want to be able to say they had a big exit because there's been a kind of a backwards flow of some angels now that used to be VCs, which I'm pretty sure you've seen. Like they used to be a VC, now they're an angel, but they have that mindset still of a VC. So they don't really operate like most VCs or most angels of, yeah, we care about the social impact and how many people we can help in saving money and the environment and all of that stuff. There are some angels who just operate differently, you know, and I don't necessarily think it's a bad thing as long as they're transparent. But that's why I think it's on the founder to do research, man. You have to as a founder because if you just go off of what the people say on just their website or maybe one talk they had, it could get you fooled a lot, right? I like to sit down and talk with these people, and having an hour on a podcast is just, I think everybody should have a podcast, like for something, because you can just talk to all the people you want to talk to. It's a cheat code, honestly.
So you're saying there are angel investors out there that are more interested in social impact over that straight 10x return?
I think most angel investors are like that, where they care about the social impact more than the money. But there's like a 20% now, 25% where they care about making money. And because they're in the angel investor category, they're kind of shunned for it by founders. Where
Right.
it's like, you're an angel investor,
Yeah.
you should care more about social than money. But then they have to kind of push back and say, well, I'm still an investor at the end of the day. Like, I want to make money. Like, I'm not
Yeah.
the VC firm that has a bunch of employees and all of that stuff, but I still want to be profitable, you know? So it's a slippery slope. I think it really depends on the investor you're talking to, you know, especially in that angel world.
Are those types of investors on your network?
Honestly, yes, I have some. 2 weeks ago, I had a angel investor. We talked. He wanted me to send them founders. They have some events and stuff where founders can go and pitch. But for the founders to pitch, they have to spend like 10 grand. Exactly. That was my response. And I was just like, they have to pay to pitch you. And then they'll also be traveling a lot. And it's just a lot of money that will go into it. Or it's a total like 15 grand, maybe 20. And I don't understand how that works. And that's more of a different kind of mindset. But again, those exist. I have a ton of investors that are on both sides. You know, it's really interesting having a show because I've been able to run into all different types of investors. That's what I love about doing what I do, is I hear all the different perspectives. And when that recording stops, people turn into their real selves again, and they're really willing to be honest. And it can be interesting. So yes, I have those investors in my network as well. I really appreciate you guys doing Q&A with the microphone. Like, this is gonna be good content.
Thank you for everything. My name is Marco. I'm working on a health tech startup. You talked a lot about selectivity. You talked about thesis. What are some of the red flags on both sides, right? I'm interested in understanding your perspective on founder-investor fit, and maybe, you know, how do we interview them as the same way they're interviewing us, and what are the red flags that we should look out for?
Oh, good question. I'm glad you asked this one. Appreciate that. One of the big ones is how they work, because there are some investors who want to be in your space and like they're part of your team. And there are some investors who are like, here's a check, goodbye, right? And I think you as a founder have to figure out, how do you want to work with an investor? Do you want somebody who's going to want check-ins every week or once a month, right? That part depends on what works for you. I don't necessarily think either one is a red flag. It just depends on you as a founder and what works for you and your setup. But I think you as a founder should be ready to check in with your investors at least monthly, quarterly at the very least. But how you work matters. And then also I think understanding like he asked about the mission part and the money. I know a guy right now I'm working with, he gets a ton of data from his customers. He has 35,000 users on his app. And he had a firm reach out to him that wanted to invest in him. And he told him no, because they were arguing on the first call about what would happen with the customer data. And he's like, look, I'm not giving up customer data. I never want to do that. I'm against it. But the firm is like, look, if we can do something with this data, then you can scale. And he's like, I just don't want to do that because I told my customers when they signed up, I would never do that. Those kind of things matter because the firm is trying to make the most money sometimes, and they're willing to do whatever it takes. So if you as a founder are not, that's something that's best to figure out in the early stages so you don't work with them, right? And you said you're in the health space too. That in certain industries, I think, and just my personal opinion, that are a little more tricky than others, just because of how serious it is and how serious it can be. Like if you're getting customer data in the health sector, that's huge, right? Another customer I work with, she's creating a cooling bra for women in menopause. Super cool product. But again, with that customer data, she's like, wants to be secure with that. You know, even the way she's doing customer research and all kind of stuff is very, very particular. So she doesn't want to work with every investor, you know? So I think when you interview the investors, you got to ask them about their priorities. And is it just about money or do they want to make impact? How they work, you know, and then what they expect from you when you do send investor updates. Like, can I just send you 4 or 5 lines of what's going on? Or do I need to tell you my life story again? Like that kind of stuff matters. And then ask them what their expectations are in terms of just how you operate on the ethical side of things. I think founders got to get more comfortable with having that conversation early because, to be honest, some investors are not ethical. They want to make as much money as possible. They're okay with screwing people over and almost like scamming people. They don't have a problem with it as long as they're profitable. And I think if you don't want that, if you're not comfortable with that, say that up front. Don't be afraid like, oh, if I turn this investor down, I will never get another one. That scarcity mindset, I think, screws up a lot of founders. So interview the investor as if you don't need them. Get comfortable in that, like, if I don't get you, I'll get another investor, I'll be fine. Because if you operate from that place of scarcity and fear and lack, then you kind of go into a shell and you're not yourself. So just get comfortable having that conversation.
Hi, yeah, thank you so much. This has been very interesting. My name's Kellen, and I founded a med device company. And basically, we recently got FDA approval, and now, I mean, I would love to get acquired at some point, but a lot of the strategics said they'd want to see that initial revenue, so we don't have any revenue. So when we're going out to investors, we need money. We know a fixed cost is to scale up our manufacturing, and then from there, there's some variables. We could either propose to make a very small amount of devices and then also pay me and my COO, you know, a very small amount and ask for like a small amount and say, hey, we're going to start scaling up, get like initial sales and come back to you. Or we could ask for like a little bit more, say we could do it faster, you know, give ourselves something more reasonable to pay and say, hey, we'll make maybe like 200 or 300 devices to start. So like, how do you balance that? Because those are very different initial asks. And is that initial ask important? I think, you know, when I talk to them, you can kind of talk through the variables, but when you submit the application online, you have to like pick that number.
Yeah, you do. That's why I don't like the application part, honestly, because you have to commit to one lane. I think having both scenarios laid out would be helpful. And then this is where research can work. So you can even go and look at the company and the firm you want to work with, the VC, look at their portfolio companies they've already invested in and do research on how that part looked. That could be super helpful to you because sometimes you get like, it's like a cheat code, the answers to a test, right? Of like, this is what this firm has done before. Because think about this, how often do we see different headlines and articles about investment? You can go and look at all of those that company has done and see how it worked. Sometimes go and ask the founders, like, what was it like when you signed this deal? What was the process like? All of that stuff could be huge. And in the application, if you have to submit, go with the easiest one, and then just let them know on the call, like, hey, there are 2 paths we can take. And if you have that laid out in terms of the future and the financials and all that stuff, you have numbers, that's huge. Because that's a part of investors that also varies. It's different based on the one you're talking to. And some of the investors, specifically in health, where you have to get FDA approvals and all that stuff in the legal side, they know people that can get you through that process faster. So they might be able to suggest choose this lane because it's going to get you to the outcome faster, or go this way because this thing is going to be harder or easier or whatever it may be. You know, so having both of those laid out in detail can be super helpful for you. Just some quick feedback from me. Was this better than me just reading off of slides? I feel like it was.
Yes.
Okay, thank you. Somebody told me this was a bad idea. I won again, okay? Well, if there are no more questions, I don't want you guys sitting here just, but I do appreciate you all coming here and everything, listening to the talk. And if you're a founder and you want to come on the show, just, hit me up on LinkedIn. We can talk. Like I said, I have the platform Compass. Shoot me an email if you want to be on the show. Just let me know you were here. Take a picture of me right now. That'll be helpful. This should take you to the platform. And I have a promo code for like 50% off for like 6 months or something like that. I'm not chasing money with this thing. It's just a way to organize everything. I take the conversations from investors and kind of condense it in a way, and I put it in this platform so you can like chat with the AI, but you're talking to actual investors versus it just being regular old Claude or Gemini or something like that, which isn't always bad, but this is just, it's better because it's set up specifically if you're fundraising. That's what Compass is for, so.
Here we go. Sorry, I'll start over. In some ways, your investor is your partner. Depending on how they work, they're an intrusive partner or not so an intrusive partner.
Yes.
And sometimes you get so focused on finding a partner that you don't think about whether this is a good partner for you. And it's just like dating. You may see the pretty girl, but if she doesn't fit with you, she doesn't fit with you. And it's the same way with investors. You've got to find an investor that works for both sides.
Yes, I totally agree. And I think some founders get a little too desperate in trying to get that investor, and they get the wrong one, and then the cap table is screwed up. And I think the desperation is probably the biggest thing founders run into that they don't know is a problem. That and maybe a lack of education around funding altogether. I think learning as much as you can as a founder about what investment looks like top to bottom will be helpful. And really just talking to a lot of investors. Like I think what helps me talk to so many VCs and angels and stuff is I'm not asking them for anything. Like when I come up to them at an event or something, we just talk about business. I don't go and ask for money. And so then they send somebody else to talk to me and then somebody else. And now my referral system is just insane. Like I don't really have to go out and do any cold outreach anymore. It's just referrals from one investor to another. And then learning how they work is big too, because it's some that they schedule like 3 months out, like, ugh. And then they keep pushing it back. That's really annoying. But then there are some who, if they schedule for 10 a.m., they're going to be there at 9:58, ready, waiting for you. So appreciate that input, man.
Absolutely. This is a great presentation, by the way.
Thank you.
So in a previous session that I had here, they told us that you need a long time to even get to an investor. You need to pass a lot of routing, a lot of the pipeline and whatnot. So now I'm just figuring out that I have to screen the investors further on. So how do you, I don't know. I guess the question is, what's the most efficient way to navigate through all those things? Sounds kind of confusing.
First, know what you want from an investor so you know the right ones to reach out to. And then be clear on the kind of investor you should even connect with in the first place. Like if I have a B2B SaaS company or if I work in health, I'm only going to list 50 different firms that are in those specific sectors. And then you got to think about the stages because there are some firms that are pre-seed. There are some that are Series A and on only. There are some that are seed rounds only. Then sometimes you got to think about geography. Where are they? Because there are some firms that only work in certain areas of the country or in certain countries, right? So all of those things come into place. But after you have that list, it's really good and comforting to me because now, okay, I know that these are like, I had a list of 100, it cut down to like 17. But now I know these specific 17 where I'm going to connect with their analysts, with their associates, the GPs, all of those people, they're going to know my name. They're going to see my content on LinkedIn. I'm going to engage with their content. So by the time we do have a conversation, they feel like I already know them, they know me. I think a more slow, methodical approach to who you connect with is better than just spray and pray talking to everybody.
Completely opposite to what they suggested us do.
I know that's popular because it seems like If I reach out to 100, that's better than just having 10, but I'm going to know my 10 to where even if they turn me down, it's something good is going to come from it in some way versus just having 100. That's just,
Yeah, numbers game. They told us numbers game. Numbers.
I mean, for some, I guess, but I just don't think that works for everybody long term. I don't see it. So that is my time, people. Right? Thank you all. Thank you.